So, can blockchain be a catalyst for development in Africa? Here is our interview with John Lombela.
It's going to be a pretty unique show where we're talking to digital entrepreneurs and Black entrepreneurs that are actually doing great things. Let it be in the marketing space, let it be in cryptocurrency. And I brought back John Lombela, a good friend of mine who's been playing in that space for quite a while. John Lombela, John is the cryptocurrency guru. I call him like that.
I'm an entrepreneur myself, all the way from South Africa. It is important to always develop new things, right? So ambitiously build new cases beyond just financial services. Yes, we believe in the financial services. I mean, Bitcoin, as a matter of fact, was created as a payment system, a peer-to-peer cash electronic system. It all started from there, but it doesn't have to stop there. Hello, and welcome to another episode of the Redefine Your Hustle Show. Today, I'm particularly excited. I am bringing in a gentleman. He is an American citizen living in Miami, Florida, one of the lovely places I love on earth. I love Miami because, it's always sunny. I love the beaches out there, really. But I mean, it's one of the most amazing places. I've been there. I've had the privilege of being in Miami for, just about 2 or 3 times in my lifetime. But I've met this gentleman in Los Angeles. And when I met him, by the way, I was on stage and he was interviewing me on a panel discussion, right? So we talked about some amazing stuff. And guess what? We talked about everything on crypto. Crypto is my world. It's one of the lovely things that today have allowed me to learn so much about money. I mean, Bitcoin is the one asset that really literally helped me to understand the world of finance. It has helped me to disrupt myself as well. And my understanding of money has completely gone beyond because of this specific asset called Bitcoin. And this gentleman and I are going to be talking about cryptocurrencies. You today will be able to learn exactly the different types of cryptocurrencies that exist out there. And also I'm going to dive in and focus on the one thing that he focuses on, and he has a keen interest, that will be on security tokens. But before we do so, tell me where you are joining from, okay? Put on the live chat, like, share, and be interactive. These sessions are there to empower you, to motivate you, to really inspire you to be able to do great things. So I'm going to bring in my guest, Kyle Sonlin, and I hope that you guys will be able to engage really as much as I'm excited to have him on this particular show. Kyle, welcome on the show, man.
Thank you so much for having me, John. It's a pleasure to speak with you again. It's been a little while since we've done a real public interview style. It's funny to switch the roles now and have you interviewing me.
Absolutely, man. So guys, Kyle is all the way from the US in Florida, beautiful sunny Miami, and he and I are going to share about an hour where we really empower you guys and kind of share the knowledge about this particular market, right? So we all know that the crypto market is a very, should I say, controversial space, but at the same time, very exciting. Controversial, why? Because it not only disrupts the traditional finance, the thing that we have learned growing up, the notion of money as we understand it today, the traditional finance system as we know today. So people are used to going into the banks and so forth. And when we introduce a new notion of money, people kind of feel a little bit skeptical. Why? Because one, they don't know what it is. Two, they are so used to certain financial instruments that they know, like debit cards and credit cards and all that kind of stuff, right? But three, when you talk to them about digital money, they're like, hey, hang on a second. I mean, digital money, well, this could be another scam. But the reality is, these technologies are just innovations, right? So they aren't necessarily scams. The problem with regard to the scams lies in the people behind it, the people behind the technology, or the people behind certain companies that are leveraging the power of these technologies for them to be able to create those scammy activities that will essentially defraud investors from around the world, right? But I think the purpose of this show is to literally demystify this thing. So you are going to see me recurrently present on my Monday shows so many different topics related to blockchain technology as well as fintech. And today we're going to talk about decentralized finance, the future of finance, but also the understanding of the different cryptocurrencies that do exist out there. I'm a fan of this particular asset. But before I do so, I want to introduce my guest today. Once again, welcome to the show, man. And talk to me about yourself. You're an entrepreneur, an advisor, an investor, and a CEO of Security Token Market. Please tell the audience exactly who you are and what do you do.
Absolutely. I'm very honored to be here on the show. Thank you for anybody that's tuning in. Really appreciate you listening to what John has to say. He's certainly a very accomplished man. He's got a wide experience in the blockchain, cryptocurrency, and entrepreneurship avenues. And so I follow a similar path. My background is in wealth management. And so I studied under the teachings of Ben Graham and Warren Buffett, certainly not directly, but through a lot of their writing, to learn about how to invest and evaluate businesses and figure out what real assets are worth and how those are priced on secondary markets. And so naturally, it was a strong skill set to be applied to the crypto space because I was also fascinated by technology and how this was going to transform our world. So I, in 2015-16, began to combine my industry expertise in investing in public companies and in equities, as well as leveraging this technology to figure out where there can be that intersection between traditional finance and traditional business and the cryptocurrency space. And so I quickly began building my brand around, honestly, being a contrarian to what some of the initial crypto ideas were regarding decentralized finance in terms of not needing any centralized comparisons and not working with the traditional financial sector and kind of totally blowing everything up. And my experience as an investor, I knew that we were going to need some of these pieces to help us out and make this thing a sustainable infrastructure for everyone around the world. And so it was more important to think about the transformation from traditional finance by leveraging blockchain technology instead of kind of doing everything totally from scratch, because that, we took a couple hundred years to build the traditional financial industry. We don't want to wait that long to build the new one. So we may as well work on upgrading what we currently have instead of just blowing everything up. And so, so that kind of began my transition into the security token space, which takes the ideas behind cryptocurrency and blockchain technology and looks to apply that same technology and methodology to the traditional financial world by looking at real world assets, equities in companies, debt offerings, and many of the things in between, ownership and real estate, and many of these different in-demand assets, and figuring out how we can leverage blockchain technology to open this up to the entire world and make it much more cost effective for everyone in the process. And so that's the formation of the security token industry around 2017 that's when we really started breaking into that space, and have been continuing to develop that over the last three and a half years now in terms of building the security token industry. And so we have 3 companies that now underneath. We have Security Token Group, which is the holding company. And then my co-founder, Herway Konings, and I have launched a few businesses underneath, including a consulting business, which helps issuers figure out what this process looks like, how they can stay regulatory compliant and follow the laws, as well as raise money in a proper way. We certainly don't raise money for the businesses, but we help them navigate what can be a pretty complicated process. and then also help the tech providers each step of the way figure out how this can work together in harmony, and we kind of help orchestrate that process. And then on top of that, we also have security token market, which is where I put most of my effort into. And that is a research and data platform. We're creating the Bloomberg of the industry, where we release market reports that discuss and break down the transactions of securities on this market, and talk about what the volumes look like, the market caps, and how they're performing, as well as we have that stomarket.com website where we have fully updating prices on how these tokens are trading. Think about like a coin market cap or something like that, but for real world ownership in companies, in real estate, in many different assets. And so we like to focus on that real world physical asset side of the blockchain industry.
Beautiful. So look, as an investor, right? What did you manage to previously invest in the traditional market before, or did you actually jump in this bandwagon of investing in crypto? And if so, what has been the difference between the two, and what did you enjoy the most to being in this particular space?
Yeah, so I definitely spent a lot of time investing in the public markets, in the traditional stock market. And my whole investing thesis back in the day was trying to identify the book value of a company and figuring out how that price would deviate from what I determined was kind of that base value. What's the lowest value that this thing could be sold for right now? And then what's that premium that we're applying for hype or for excitement or for any of these different pieces? And then trying to figure out if that was fair, if that was justified. And so I definitely stuck to tech because that was what I knew best, being somebody that's in that target demographic and is fascinated by technology. I was always sticking around the tech stocks because I felt that I had a competitive advantage over many people that were still trying to understand that industry. And I applied that same level of thinking to the crypto space, where I also felt that we're certainly much newer in the crypto space versus the public equity markets. And so by leveraging the fact that we're so early to get an edge on the rest of the market was an opportunity for me, and something that I definitely leveraged. In terms of the comparisons and the differences, certainly one of the frustrations that I have with the cryptocurrency industry is that we don't actually have ownership in the businesses that we're investing in. And so for me as an investor, I didn't feel that was right. I didn't like that value proposition. I was not one to hold many of these assets. I didn't feel confident in investing in those assets because of the fact that we didn't own anything. We were creating these things out of thin air. And so there is an argument to be made for something like Bitcoin or for Ethereum in terms of what they can provide to the network. But I found that lacking ownership in the business, especially for the 99% of other cryptos aside from Bitcoin and Ethereum, I felt that if you were going to be investing in the next Bitcoin or the next Ethereum, you should absolutely have exposure to the business that's actually going to be profiting off of those developments. So the difference, I think, for sure in the public markets versus cryptos was that idea of ownership and actually being an investor in the business, having control over the business's decisions, and then having the retribution value if the business were to fail or were to be acquired or something along those lines. And so that's where we tried to combine the two in terms of the public market and the crypto, and create security tokens, which are that idea of ownership by leveraging a blockchain or cryptocurrency, which allows for international investment. Because that was my other frustration in the public markets, was that I remember specifically looking to buy shares of Samsung, the cell phone manufacturer, but that's traded on the South Korean stock exchange. And so I had difficulties actually purchasing through an OTC provider. I wasn't able to just buy it off NASDAQ or New York Stock Exchange because it's not listed there. And so that process didn't make a lot of sense for me. And being a US investor, I have access to so much more than what the rest of the world does. So if it was already difficult for me to purchase those things, I can only imagine what it's like to be someone from outside of the US trying to buy those same equities. And so because of that, there really does seem to be a demonstrated need in the market to be able to buy and invest in equities from anywhere around the world and not have any issues. And so that's what we're looking to build with security tokens.
And I think that's the beauty, right? Because I mean, look, last year, for example, in 2019, when I did my tour around the world, and in fact, when I spoke as well in LA, the Crypto Invest Summit, for me, it's always been about the democratization of investment opportunities for the world. Because if it is harder for a lot of people to be able to invest in the US stock market, and yet there are so many great opportunities out there, I do believe that the blockchain technology came in, especially the crypto market, really came in to to completely challenge that particular world, right? So that people can actually have access to great opportunities and say, you know what, I want to be able to invest in that particular company. I don't have to be a US citizen, but because of the blockchain and crypto asset, I'm now able to participate in investing my dollar or whatever currency into that particular asset, right? So that's exactly the reason why I definitely love this space. Before we move on to the next one, I want to find out from you, have you been one of those lucky early investors in Bitcoin, or when you came into this space, it was probably late in the years, probably 2016 and 2017, and you know, being a fintech guy or a tech guy, you realize, okay, you know what, let me start diving into this space, understanding exactly the Bitcoin market. At what point in time did you start investing or starting to evaluate technologies like Bitcoin and other crypto assets?
That's a great question. It's certainly one that's a little sensitive, but you know, I definitely have experience trading and working in the Bitcoin industry since 2015 and 2016. So
Okay.
so I spent a lot of time working in the space. I spent a lot of my time and effort actually working with businesses instead of just kind of day trading or sitting around and you know, selling and buying different cryptos that I thought were gonna, you know, pop or crash. A lot of my sweat equity that I put in was working with blockchain businesses to actually sort out the consensus mechanisms behind the scenes. I really enjoy the technical component of governance. I enjoy the technical component of how these different pieces work. And so I enjoyed spending a lot of time working with strategy with these teams to figure out, you know, how they could permeate different markets, how they could advertise and build adoption. And many of those different pieces I've thoroughly enjoyed, and that's where I spent most of my time. And yeah, I've been in this for a while.
Beautiful, beautiful. All right, ladies and gentlemen, just a quick reminder, Kai Sonlin is a US citizen and currently living in Miami, Florida. And he and I met in October last year in Los Angeles at the Staples Center, where we actually, is it the Staples Center or the Los Angeles Convention Center? Between the two, whichever. But but I think at that time we attended both the Crypto Investor Summit and normally gathering thousands and thousands of people from around the world who actually go there and talk about the crypto market. So please, as you tune in on this particular show, like, share, comment, and make sure that you prepare your question so that Kyle can certainly engage and so forth, right? So remember, each and every single time on a Monday, you probably stand a chance for some kind of a giveaway from me. Okay, look, maybe it could be you being able to invest in Kyle's market, right? So I could actually give you an opportunity to open doors there. But you got to be able to follow me, and you have to engage and ask some questions, right? So the one thing that I'm going to do right now is to literally move into, let's talk about the different types of crypto that do exist out there. People have this understanding, hey, you know what? There's Bitcoin, there's Ethereum, and that's it. That's the one thing they know. But at the same time, they also know that there are multiple other cryptos that do exist. But fundamentally, and this is what I always tell people, and I tell them these crypto are, first of all, technologies, and they are there to be able to solve a particular problem. But most importantly, right now, I want us to be able to differentiate the different type of cryptos that do exist. In fact, there has been the introduction of stable coins as of 2018. So can you please talk about the different type of cryptos? And I also want to understand what has then been your focus and why in the security token offerings.
Absolutely. Yeah. So we saw in the advent of the cryptocurrency space, this idea of the ICO and the utility token. And this idea, you know, has been spun a million different ways, but really from an economic perspective, when we're looking at what this thing is that it's an economic participation model. And so what these companies are trying to do is they're trying to say, you should use our platform, and in using our platform, we're going to pay you to do that. But since we don't have cash, we've created this token that we're going to pay you, and hopefully that will have value on secondary markets. And that's pretty much what the utility token has become. There are some use cases that can be successful here in terms of helping businesses avoid the exchange rate fees, that the cost of changing from US dollars to Chinese yen to to any of the pound, any of these different currencies, right, have these fluctuations in their value. The Forex markets are certainly very well aware of that. And so the utility token being a vehicle to pay out to users or to investors or to whomever is a very compelling use case in terms of avoiding some of those exchange rate fees. However, that wasn't necessarily what the main goal of the ICO space was for a lot of these businesses. And so that kind of fell out of favor in 2016, 2017, when a lot of people realized that they were investing in this grand vision, but as we had said earlier in this show, didn't actually have any ownership in the business. And so they were investing for the long haul, giving this company all this money, but then their shares that they were giving in return were not, showing that same value scaling over time. And so I think that the ICOs fell out of favor in that time, but there are some successful use cases of ICOs. I don't want to necessarily crack on the utility token fully, because we see companies like Reddit that have successfully implemented a utility token into their platform in terms of incentivizing users' actions and allowing them to redeem their points for rewards and for engagement on the platform. So it definitely can be a successful model. We see Uber Cash. Uber, the taxi company, uses Uber Cash, which is kind of their own version of a utility token. It's a closed market utility token, but some of these assets can be useful for exchanging currency and for paying out. But again, I think that the market is a lot smaller than what originally was excited for. From then, we progressed into the idea of security tokens. And this is the idea of tying equity and real world assets to a cryptocurrency to allow for anyone around the world to invest. And it's been a much more sustainable market because of the fact that you're actually owning these businesses. And since the security token market has been very successful. Following the security token market, as it's continuing to develop today, we also have, as you mentioned, stablecoins. Stablecoins are the idea of creating a currency that can be used and is cryptographically secured by the blockchain, but it holds its value, because in the same way that utility tokens and ICOs didn't work for providing that consistent value, we still needed that use case. We still needed a consistent value, something that you could invest in and be sure that it's going to hold its price over time. Bitcoin didn't solve that problem because it's an investable asset, just like gold. People don't use gold for currency because it can fluctuate in price. And so we needed that digital dollar, or whatever you'd like to call it. And so a lot of these developments around the world have been procured to build central bank-backed digital currencies. And we actually wrote an article by the Security Token Advisors team led by my co-founder, Herwig Konings, that actually details over 50 or 60 different central bank digital currencies in the works right now, all around the world. Countries all around the world from every continent are working and building their own currencies for use in their countries. And so there, you can definitely look that one up if you're interested in hearing more, but stable coins are here to stay for sure. And then following that, we see right now in the DeFi space, the decentralized finance space, there's a lot of hype around what are called governance tokens. And honestly, they're kind of similar to ICOs. They're kind of a utility token that, if you're familiar with consensus mechanisms, it's essentially leveraging the proof of stake governance protocol. So essentially you can stake your governance token to then have votes and control over the system. It's an interesting concept, but again, it does bring up some question marks around the actual ownership of the party that's facilitating the decentralized lending. So we're going to get into that for sure later in the show. But governance tokens are another example of crypto assets. I think that the one that I spend almost all of my time in, as I said, is the security token space, because we're building a sustainable financial infrastructure where we're actually talking about ownership in companies, debt offerings, real estate ownership, actual assets that don't have the opportunity to trade like stocks. We're trying to help create that market. And it's been the one that has been the most, I think, sustainable and promising moving forward, as opposed to some of the other examples, not including stable coins, which are also a very interesting use case.
Beautiful. Just to let you know, we have so far 5 people from different nationalities that have already joined this particular conversation. So I've got somebody from the Congo, I got somebody from Botswana, and I got somebody from Nigeria, my good friend Tony, and I got somebody from South Africa as well, and a few other places. So this is, you are exposed to the African world and actually even in Malaysia as well. So I've got somebody in Malaysia tuning in at this moment. So this is what I love about this particular show. But not only that, the last 4 years, I've traveled around the world and I've created a huge network in all 4 corners of the world. And people follow me from different ethnicities and different countries and different time zones. And this show is about discussing some of these topics because I am a pro blockchain and crypto individual. I love this space and I love to be able to expand to expand on that. And in fact, one of the things that I mentioned when you asked me a question in LA is that blockchain and crypto assets are only as good as the community behind it, right? So the ability for us to be able to create a network effect is so important that for the first time, cross-border and irrespective of nationalities and political agendas and or religious belief, we're now able to connect around the world, right? So somebody today can definitely invest in the US as much as somebody in the US can actually look into investing in assets or project within the African continent, as long as it has to disrupt the world. And that's exactly what we are currently working on right now. But before we go on to another topic, and I think you've raised a few elements around digital currency for central banks. My question to you right now: what is the negative effect of countries trying or attempting to ban cryptocurrencies, and do you think they are going to succeed? What is your take on that? And I know the US, as a matter of fact, has been at the forefront of that, right? So the SEC and the Federal Bureau or the state and all that kind of stuff. So many states have had different opinions with regard to embracing digital asset, right? But we've seen Wyoming in the US, establishing quite a few friendlier regulations, and we've seen other jurisdictions as well to being able to embrace this world. What do you make of that particular one? How can we involve and work together as a community to helping our government to succeed and to stabilize and make sure, hey, you know what, we are not here to fight you guys, but we're here to make you even better, because we live in a world that is progressing. And in fact, people are tired of being constantly led in a path that doesn't benefit them and only political agendas. Absolutely. So what is your take on that?
I love what you said there, John. I think that that's totally correct. And the real message that we need to get across to regulators and to the traditional financial industry, because remember, it's not just regulators. We're talking about the largest investment banks, the largest financial players, JP Morgan, Goldman Sachs, all these companies that they have a vested interest in maintaining their business. And so if they think that the crypto space is going to ruin their business and that they're going to be obsolete, and there's no opportunity for them to service the people if cryptos reach mainstream success, they're not going to be in support of it. And they have the connections, they've got the capital, and they have the regulators' ear, since they've been working with these same regulators for centuries. And so we have to recognize, and this is the same point that we covered earlier in the episode, we have to recognize that we need to work together with the traditional financial industry. We need to help regulators see that the blockchain technology, having an immutable ledger of all of the transactions, makes it so much easier to track financial crimes. It makes it so much easier to prevent fraud. It makes it so much easier to prevent money laundering. All these different things that they're in charge of, and their main goal is to prevent a lot of these foul play actions from happening in the financial services industry. It makes their job much, much easier when they can leverage smart contracts and blockchain technology to scrape and scan all the financial transactions. It makes auditing much easier. And so those are the angles I think that we need to hit in terms of helping with that mainstream adoption. I think to answer your first question about whether a country can ban these cryptocurrencies, they absolutely can. They can certainly try. They can make it illegal for you to buy it with US dollars, with a credit card or with a debit card. They can make it very difficult to obtain these things. But I only think that makes the value proposition of a lot of this much stronger, because it says, if these countries want to try to censor you, you can get access to this thing that is not censorable. They can't shut it down. They can only prevent their users from accessing it. And so that's kind of the difference. And I think that with the innovation and with the resiliency of the human race, I think that we will persevere regardless of how that happens. But again, it doesn't need to be a fight. I think that the reality is that looking for ways to make a lot of their job easier and show that we are holding ourselves accountable to the same level that they hold traditional financial players, I think will help that adoption. And it's certainly happening. I think that there's a lot of people think that these regulations and these changes happen overnight. And we're so used to startups where like a startup can raise $10 million from a couple investor checks and then quick build a program. And in 6 months, they've got, a revolutionary idea. And that's awesome. And I love that. And that's why I work in this space. But the reality of regulation is that it's intended to be slow. It's meant to take a long time so that we can figure out the consequences of the things that we build and develop. And so I think that it's definitely happening. It's moving, but we just need to continually to prove that we make the job of the enforcement agencies easier. And again, that we're holding ourselves to the same standard that they are for their traditional financial players. A lot of people like that saying of move fast and break things, but that doesn't get you any goodwill from the SEC or from regulators because they don't want you to break anything. That's kind of the whole point. So it's a slow process. It takes a couple of years, but even in the last 2 or 3 years, we've seen tremendous progress from the SEC and from regulators here in the US. And I think that once the US kind of makes some definitive decisions here, I think it will have serious positive effects around the world.
So the one thing that I've seen actually is, look, the SEC has sort of progressively gone in the world of helping out the space of crypto, right? To say, hey, you know what, we don't want to shut it down. It's difficult for us to shut it down, but we want to be able to work with these guys and help them out, right? So what are the mechanisms that have been able to put together in place to ensure that folks like yourselves who are working in this place, do you have to have access to some sort of a license to be able to work in this space? Do you have to be really compliant with the SEC? Do you have to register with a certain board, or what's the play like in the US for you guys?
That's a great question, and one that's often very misunderstood from people outside of the US, which is really what helps our business, because we deal with this day in and day out and are very fluent in a lot of the requirements, which allows us to be very helpful for issuers. And I think that the main thing for the SEC, if you're to take one thing away from the requirements from the US in terms of why they are considered strict, is they have the highest level of standards for onboarding investors and bringing investors onto your project. And so you need to be very careful about where you're taking money from and how you're taking the money. And so that's where we've seen so many issues from the crypto space, so many issues around the world, from prosecution from the US to other companies, is because they took on US investors without properly making sure that investor was allowed to invest. And so here in the US, they have very strict rules around what you can invest in. There's two distinctions between investors. There is non-accredited investors and there's accredited investors. And you may have heard those terms before. Yeah. But an accredited investor is somebody that makes $200,000 in income or has $1 million in net assets from their ownership in real estate, in equity, in liquid assets, all those things, excluding their primary home. So if they have $1 million in net assets, or they're making a consistent $200,000 a year, they are an accredited investor. And that allows them to invest in anything. It allows them to invest in any investment opportunity in the US. And oftentimes the SEC does not prosecute very strictly on accredited investments, because the idea here is that, look, if you have enough money, you can take the risk of this thing not falling through, right? You're not putting your whole life savings into this thing. You've got plenty of money that you're making, and so you can afford the risk. Non-accredited investors are just the average persons. Anybody is a non-accredited investor. Non-accredited investors make up about 92% of the US population. And so those are also called retail investors, if you may have heard that term as well. And so retail investors are the golden goose of the investment opportunity, because it's a huge population of people that are based in the US. They're used to investing in vehicles, and certainly it's the largest capital market. And so this investor group is one that everybody wants to target because they're very exciting and they have a lot of money. And so the SEC and the government recognizes that that group of people is in very high demand, and is also one that can be very easily influenced by people who don't necessarily have the right means. They haven't put together the proper precautions. And so if you're taking investment from the US and you want to take on non-accredited retail investors, you have to definitely take a much higher level of diligence. And so that's where I think a lot of the issue comes from, is that people want to accept US investors and they don't want to go through the process of actually registering as a security. And so when you register as a security, you can leverage a private security fundraising exemption that allows you to raise from accredited investors, and you can do that without getting a license. You don't need to file for anything. You literally just file a form and you submit it one way to the SEC. So you don't need to be approved. There's no legal approval process. It's just, hey, here's what I'm going to do. I'm doing it. And as long as you take on accredited investors and you fill out the proper forms by consulting your legal counsel, you can do that very cost effectively, and it's not expensive. It doesn't take too long, and you can get that done. The problem happens when you're looking to onboard retail, non-accredited investors. There are a few possible ways to do that, including the Regulation A+, which does allow for retail investors. But as we've seen by example, it takes a long time because you do need to get approved. You need to be approved by the SEC for that one. So you can't just say you're doing it. You have to be approved, which is a back and forth process. It's also very expensive because you need to hire lawyers for that. So it's a possible process, but it's one that's not super common because it is kind of difficult. So I think that the one thing to take away is that make sure that you're taking on the investors you're allowed to. Make sure that you're verifying them. But when in doubt, only take accredited investors. When in doubt, accredited certainly is almost always fair game. It's the non-accredited, I think, that gets people into trouble.
And I think you're so right. But by the way, for some of you guys who may not know what the SEC stands for, that's the Security Exchange Commission, right? So they are there to regulate the financial market, but also other types of solutions or products or offerings within the American market, right? So if we look, for example, at Telegram, a successful messaging application, and we see that Telegram went on to raising, to doing the ICO, and they've raised about $1.2 billion, which is about 10 days or 2 weeks ago. The SEC has forced Telegram to refund all the money they've been able to raise to the investors around the world. That's a schlep. So it means that every single project out there that is looking to tap into the US market, because it is the most liquid market in the world, need to be able to go by the rules. So having said that, Kyle,
Rules.
Absolutely. I want us to talk a bit about, and I know you are a proponent of this, right? So I want us to talk about the global financial system that you currently are involved in. And by the way, there are a couple of questions already that I'm going to pull out to talk about this thing. So what's your involvement in this so far? What are you doing that can get me excited, especially with regard to the fact that we are working on our own digital banking and investment platform?
Yeah, so building a global financial system is important for a lot of different reasons. And certainly with a lot of our viewers being outside of the US, I don't need to explain why making a global financial system makes a lot of sense for them. Certainly they understand, and I'm sure as you do, John, that we should all have access to the same investment opportunities. There should be no reason why somebody from the US is able to invest in startups that could return huge gains and make tremendous money investing, while those in other countries don't have that same opportunity. It makes no sense. It's not fair. And it's something that is understandable with the technological limitations that we had all the way through the history of time. right? It was very difficult for the SEC or for any of the governments to track where the money was going. So it was easier for them to kind of say, no, it's only going to be in our country until we can figure that out. But the beauty of the blockchain technology is that we no longer have these issues surrounding tracking where the money's going. As long as these things are constantly recorded on chain, and that blockchain is then, that information is then able to be provided to the regulators in all the different countries, and we can provide that to everybody and all the licensed regulators, then we shouldn't have those issues of international transfer. There shouldn't be money laundering concerns around these investment opportunities. And so it then allows a much more practical opportunity for investors anywhere around the world to get access. On top of that, with the idea of the tokenized aspect of this, we're not just talking about blockchain. Blockchain and tokenization can be two different pieces. And so the tokenization aspect allows us to create that digital token that can interact with any different platform. And so in the traditional markets, in the traditional stock market, Amazon stock is only traded on one exchange, and it can only be traded on one exchange. And same with Tesla or any of these different companies, Snapchat you may have heard of. And so NASDAQ controls a lot of the opportunity there. They get all of the opportunity in terms of investment, and they don't share that with anybody. And so that doesn't necessarily work with a global financial system. And so by leveraging tokenization, we can actually take that same asset and transfer it from one place to another to allow for a much easier means of transaction for those outside of the US, because it can be difficult to invest in the NASDAQ from South Africa. Whereas if there was a South African exchange that also supported the same assets, you could then very easily make that transfer and make that investment. So I think that's a crucial piece to it. And we're working with that by working with exchanges all around the world. We track over 70 security token exchanges in development around the world, with maybe only 15 or 20 that are actually being built in the US. So a majority of them are international exchanges looking to support security token technology and allow for investment in any of these assets around the world. And so with security token market, what we've strived to do is build with all these different exchanges and bring in all of their data feeds and their sources so that we can show the entire world all of the world's offerings. And so that's one of the other difficult pieces, that never before have you been able to see the international equities on the same platform as the local ownership and opportunities in your jurisdiction. And so we're not just talking about one country, we're talking about the whole world. And so it's possible with the new developments that we're building.
And this is so important, man. And I thank you very much for saying that, because it really responds to the current mission I have, right? And the mission I've just actually boldly launched with our own digital banking and investment platform called Axalio. Initially, Axalio, first of all, stands for African Exchange and Liberal, because of the whole blockchain and digital token, whatever, liberal investment opportunity, right? So why did I come around with that particular name, focusing initially on investment? For me, just like you just rightfully say, it doesn't make sense that, hey, everybody uses Facebook around the world. We use Facebook in Africa. Everybody uses this, Uber or Snapchat and whatnot. But we don't have opportunities to invest early on, either pre-IPO or post-IPO to these particular opportunities, right? And we now see that most of these Silicon Valley, based tech companies actually go on and create multiples of returns and giving those returns back to their investors. And guess what? The rest of the world just become a whole bunch of users, right? Onto the platform, fueling in more liquidity into these platforms. And yet we are unable to get access or even a simple piece of the pie. Getting access to 1% of the $500 billion worth of Facebook right now would make a significant difference to investors around the world, or let alone in Africa. So the Axalio platform is being built with that in mind. Why? I want to democratize this opportunity. I want to bring, in fact, investment opportunities from the world to my community within Africa. So that's why Axalio is all about taking Africa to the world and bringing the world to Africa. Particularly as well, cross border, to be able to get all our other African countries or community members to interact with them among themselves, because we have really so many great opportunities. And by the way, I'm so excited because I can see a working opportunity with you and I, whereby under our investment offering, it could be tapping into either through the APIs into your investment platform and allowing folks like Tutu or anybody else following on this particular live show right now to say, hey, you know what? I want to invest in some digital token related to Tesla, and I've got a couple of $1,000s, and I would like to do that, and hoping I can create my own portfolio and manage that over time. So that's exactly what Axalio is being built right now, and we are so excited to be able to provide to you guys this opportunity. So I look forward to that, man, so that you and I can continue building so boldly the financial global system based on what we can actually provide so far. So the next thing I want us to talk about is, why are, according to you, financial firms turning into crypto right now? I mean, we've seen, look, we've seen the Jamie Dimons and calling Bitcoin a scam multiple times and causing chaos in October 2017 and crashing down the price of Bitcoin, only to spend about $78 million to buy, so many, what's going on these days, man? All of these guys are flocking in around. We also saw Paul, I think his name is Paul Tudor, sometimes.
Paul Tudor Jones. Yeah.
So what can you say about that, man?
Yeah, well, I think that there's two ways to look at it. So cryptocurrency represents two things. One, it represents an investable asset, which is actually buying the tokens, whether that's Bitcoin or whether that's Ethereum or any of the other ones. Or you have the blockchain technology that underpins the cryptocurrency. And I think that many of these financial firms are embracing certainly the second, the latter of those two things. But to talk about, or to stay on topic at least, for investing in Bitcoin, I think a lot of people are looking at it like a financial hedge against the traditional markets. And the idea of Bitcoin is one of one in terms of things that you can invest in that are purely backed by the hardware development of our technology. So we're constantly striving to build the fastest, most productive Bitcoin miners. And what that really means is that we're just trying to create the fastest, most productive computers. We're just trying to build supercomputers that can do math problems faster than any computer has ever done before. And if you can create a computer that does math problems faster than anybody else's, you can mine a lot of Bitcoin. And if you mine a lot of Bitcoin, you're then financially getting paid off. So there's this financial incentive to build the best computers that we possibly can. And Bitcoin underpins that. Bitcoin is the network that we're building that for. And so as our computer processing increases, so should, in theory, the Bitcoin price. And so I'm certainly not a Bitcoin expert. It's not something that I traditionally specialize in. But I will say that I can see how Bitcoin would be an interesting investment opportunity to hedge yourself against the traditional markets. For example, you could buy shares of NVIDIA, which is the leader in the graphics card manufacturing, which is a big part of Bitcoin mining. And so that's a company that's been very successful, NVIDIA. So you could buy NVIDIA shares, and you could also buy Bitcoin. And Bitcoin is kind of what the NVIDIA shares are being used towards. So it's just a different way to get exposure to that development of the computer processing around the world. Instead of investing in NVIDIA or in AMD or or buying futures in Silicon, you could instead buy Bitcoin. And I see that that's a different way to reap the same reward. So I see that there as an opportunity. And it's one of those things where it's like you put 1% of your portfolio into it just because maybe it pops off, and in the event that it does pop off, you could be very successful. But I think that the real value proposition for financial firms is in blockchain technology, and more specifically smart contracts. And what smart contracts are really just an if-then statement, where you're saying, if this thing happens, then I want you to automatically do this specific thing. So it allows for the automation of a lot of tasks that were traditionally very costly for financial firms. For example, the settlement and clearing industry, right? Of the idea that in the traditional financial sector, when I sell a share of stock, there is actually a bunch of firms that have to be the record keepers of me trading that stock. They all have to confer, discuss, and approve that transaction, and then they need to write it down into stone. And so that process of conferring and sharing that information is something that can take up to 3 days. So I could sell my share of Amazon, and 2 days later, it still hasn't been confirmed. It's up to 3 days. And that makes no sense. That's super inefficient, and it's very costly because there's other firms that rely on that data. And so the longer that it takes to confirm my trade, the longer then that it takes for the next person and the next person and the next person. So, so a lot of these automated tasks are something that we couldn't necessarily do before because of the fact that it requires a lot of sensitive financial data. These firms are very highly regulated in what they can and can't share with the public because of they don't want, the government doesn't want, TD Ameritrade to just sell all my financial data to everybody, right? So they have to be very careful about how they do it. And so they see this building this blockchain and leveraging smart contracts to execute some of these processes, which can save literally like 3 to 5% on a lot of their business units. And so, saving 3 to 5% can result in hundreds of millions, if not billions of dollars for these firms. And so if you can pretty much just upgrade your tech, have better tech, and save money, I mean, that's the whole point of, that's why we transitioned from paper shares to the digital world that we're in today. And it's the same exact thing from today, from centralized to the decentralized nature of what we'll see in the future.
Absolutely. As you mentioned, the reason why I brought up this one here before I take the first question right there is, you mentioned smart contract. I think smart contracts are one of the greatest, should I say, inventions for the crypto market, really. But is it good for crypto or is it a scam? And the reason why I bring this up is because there's been a lot of movement around, people find innovative ways of being able to get money from other folks, right? I mean, I've seen a lot of folks out there building MLM-based businesses at the back of crypto, and smart contract is definitely one of them. So whenever someone says smart contract, it seems like, hey, you know what? Here's a new thing. Here's a new thing. We're going to go out there and make money. But here's the thing for me. As much of smart contract for me, just like you rightfully say, is a whole bunch of ifs and then. It's just a bunch of code, right, that are written on the blockchain ledger. But here's the thing: if your business model doesn't make sense, in fact, you're writing a whole bunch of junk on the blockchain ledger.
Exactly.
That's what it is. So the model has to make sense. The technology is there, so we shouldn't blame the technology. We should blame the people making use of the tech for them to be able to do something else. So let's get the first question so far.
I think you're totally right. Just to jump in on that for 1 second, I also think it is important from the scam perspective that just because you're using smart contracts doesn't mean that the code itself was written correctly. So you also need to make sure that you're getting your smart contract audited, where there's literally firms that will review the code to make sure it does what you want it to do. Because a lot of times the intent might be there and the theory and the strategy, that all sounds great. But if you don't make it right, now you just have something you can't change that you launched that's incorrect. And then that results in hacks and things like that. So there's two sides to the story, but both, John, as you said, you need to make sure that you're detailed and specific in what you want.
Sounds good. So let's take the first question. Sanzeli Majola from South Africa actually asked a question: is cryptocurrency any different from your exclusive American Express card, Jens? Because in many countries and companies use the card as a form of purchasing method from Freedom Park to Soweto. So he's actually from Soweto here, one of the most beautiful places in South Africa. You should actually visit one day. But I mean, what do you take of that from Sanzeli?
I honestly don't think it's very different at all, and especially in terms of from the end consumer. So this was one of the big talking points that I used to make in the crypto scene when I used to travel and sit on panels and stuff before COVID, was that from the end customer experience, it should be no different to you at all. You should have no difference in experience from what you're currently used to and what currently works for you. The only thing that changes is from the banks, that they save money, which then charges the retailers a lot less money. So for example, when you swipe your American Express card, American Express charges the restaurant or the store that you're swiping from, and they charge their fees directly to that business. And those fees are tied to how expensive it is for them to settle the transaction and communicate that to your bank. So if they can make their job more cost effective, they can charge less to your banks and to your stores and restaurants. All of those smaller businesses actually enjoy a better style of business and a cheaper cost of capital with the blockchain technology. So in a lot of ways, it's very similar for you to use your American Express card or your crypto, but for the banks and for the businesses, it changes a lot for them.
Beautiful. So let's take another question right now from Tutu in Cape Town. And he asked a question: what are the fundamentals of listing a token or coin in an exchange?
It's a great question. I think it depends on the type of asset. So for example, the cryptocurrency space, we actually weren't talking about securities. And when I say securities, I actually just mean like a stock. And so that when you're talking about an asset that is investable and has future gains, there's a lot of different ways to define a security. But when we're talking about a security, which is an equity in a business, which is a real estate property, which is ownership in something, it's a lot more stringent in terms of what that listing process looks like, because the exchange itself needs to have a much higher level of license than what we've seen in the crypto space. And so I can't talk quite as much about crypto because we're still not sure what is and what isn't legal in that space in terms of what they can and can't list. And I'm certainly no lawyer, but I know that in the security token space, there is, for an exchange, you need to have a certain level of license. It does vary based off the country, but you need to work with regulators to make sure you can list these things. And then for the fundamentals of listing a token, this is I can speak a little bit more on. I think that the important piece is going to be clarity in terms of what the underlying asset is. So if you're selling a crypto that's backed by real estate, you need to make it clear what that real estate property is. Where is it? What was the valuation of the property before you started selling it, or for the equity, right? You need to have those disclosures. You need to make sure that your investors are aware of what this investable asset is. If it's a real asset, if it's not a scam, if you're being legitimate, there's nothing to hide from here. This is just making sure that you're transparent with your investors the same way that you would be transparent with them in a traditional investment. And then from there, it needs to have good communication. So if you're listing on an exchange, just being listed on an exchange doesn't mean that your token is going to have liquidity. Just because they can buy and sell your shares doesn't mean they will. And so the important part here is making sure that the communication and investor relations between the token issuer and those investors and that exchange is always at a high level, so that those investors are confident that the project is being worked on, that the team is legitimate, and that they're making progress. So those are some of the important pieces, and then there's certainly many more things that we'd be happy to discuss with security token advisors if you're looking for a consultant.
Fantastic. So early on, we kind of briefly talked about decentralized finance, right? So DeFi, for those who who may have heard of the word DeFi, that only stands for decentralized finance. I want you to tell me a little bit more about, first of all, what's the buzz around it, right? So it's like the new thing, just like smart contract and so forth. And now there's, DeFi as of last year, right? So what's going on around DeFi, and what could be some of the use cases around it?
So everyone's excited about DeFi. DeFi leverages smart contracts. So when you think about, these are all buzzwords, as I think you've correctly identified. But I think it's important to know the hierarchy. So the reality is that DeFi is the idea of cutting out middlemen in the financial service. And so by using smart contracts. So the smart contracts haven't gone away. They haven't fallen out of favor. Smart contracts, this is just another use of smart contracts, is DeFi. And so DeFi is interesting. I think that it's actually a misnomer, if you will. I think that DeFi doesn't fully incorporate what we've seen in the DeFi space, I think. But what we've seen as a use case for decentralized finance is decentralized lending. And that's been the most successful and the very popular form of decentralized finance that, again, uses smart contracts instead of having a bank. So smart contracts are replacing the bank in terms of lending. And so the way that this works is that you as an asset owner have, let's say, $100 worth of an asset, and you can give that to the bank, or the smart contract in this case, the DeFi protocol. And so you lock in your $100 worth of Bitcoin. And in exchange, you get a $50 loan in Bitcoin. And so you in gross assets went from 100 in Bitcoin to 150. And then you can use that extra 50 as a hedge against your investment. So the idea is that if you want to invest in something, you can invest in it. You're holding it for the long term anyway. So you may as well place it into this account. You'll get additional liquidity that then you can then do whatever you'd like with it. And the idea here is that they don't give you the full 100% of your loan. You locked in $100 worth of Bitcoin and you got back 50. So you can use that 50 however you want, and as long as you pay back that 50, you can get your 100 back. But if the price of Bitcoin decreases, then they can just take back the $50 worth once it goes down to 50, and then all is settled. You got your 50, they keep their 50, and then you both just lost the $50 of Bitcoin as the price changes. So the idea here is that it's an over-collateralized loan, so that you actually have to give more in collateral than what you're receiving for a loan, so that the whole system doesn't just fall apart in the case of Bitcoin declining in price or whatever. And so this has been super successful, very exciting, because this is all built by smart contracts in a decentralized manner. And the value of why that's exciting is because it saves a lot of money. So all of the interest that you would get on that loan goes directly to the two participants in the system. There's no third-party bank that takes 5% of the loan or takes a percent of the payback. No, it's literally going right from one side to the other, and so everybody's happy. No one feels taken advantage of, and we've seen a lot of opportunities to make a lot of money in the DeFi space for now.
And by the way, I think it's a very exciting, sexy space right now. We've seen the Compound digital token locking in just over $2 billion so far and being really super successful. And by the way, the Axalio platform is going to bring to you the DeFi elements as of the first quarter of 2021. Those are some of the fundamentals that we are currently building our digital banking sector onto. So there's one question I want to pick up from Rutsani. She's actually here in South Africa, in Midrand. She's asking, so we spoke about democratizing investment globally and digital banking. So how do you see, from your perspective, by the way, and I know that the US is one of the largest banked population around the world, but definitely there's also a certain aspect of the unbanked population. When you look at Omisa Go token, I think created by some of the Japanese folks, they have this thing of unbank the banked. So essentially trying to remove the way we have been banking before and banking a new way under the whole blockchain space, right? So how do you see digital banking and blockchain technology impacting the unbanked market in Africa from your perspective? Not only in Africa, but that could also be in Latin America or in some other part of, let's say, the Philippines, for example, as well, where there's a huge population that is also unbanked.
Absolutely. I think that this is such a great question and so relevant to the plight of millions and billions of people around the world, and something that I really do think that a lot of these opportunities that we're collectively trying to build can really help provide some solutions. And so I think that one of the really exciting things for me in the work that I'm doing with security tokens and with stable coins is that it allows for investors anywhere around the world to have access to stable investment opportunities that can allow them to help generate wealth. And really what I mean by that is in the stable coin perspective, we're seeing countries all around the world that don't have access to a stable currency that they can store their money in and be confident that that's not going to change in purchasing power over time. A lot of times we see governments that are issuing more and more dollars, printing more cash, and are devaluing the value of each dollar that you may own in your respective currency. And so that's not a fair system that doesn't allow or harbor a successful investment industry. And so stable coins, I think, are a great way to help develop that. In terms of security tokens, the other side of that coin is that not only are a lot of these unbanked jurisdictions struggling with the stability of their currency, but I think that the citizens also aren't able to invest, as we said earlier, John, in opportunities to make wealth and to create wealth for themselves and their families. And so a crucial thing about providing investment opportunities is creating the opportunity for those anywhere around the world to be able to invest in the future of their technology, invest in the things that they consume, and to be able to have access to these opportunities so that they too can share in these returns and succeed over time. This is not an industry that just prints money. It's not like we're talking about the lottery here, right? We're talking about investing and being smart business people, evaluating the opportunities and making successful investments. But I think that is something that anyone should have the right to be able to participate in. And it's not just or fair that no one else around the world has access. So that's what we're trying to build with this globalized investment opportunity, is that we're just trying to create the opportunity for anyone to participate and invest alongside these businesses and help them grow. But on top of all of that, we're also talking about allowing local businesses to raise capital. So we're not just talking about allowing Silicon Valley to raise money from African citizens. We're talking about African businesses that can raise capital not only from African citizens, but African businesses can then raise capital from the rest of the world, right? I recognize as an investor, as a startup founder, as an entrepreneur, that the opportunity in locations like Africa and Asia and Europe and everywhere else around the world, South America, there is so much opportunity. There are so many people that are underserved in terms of a lot of the beautiful things that the technology can provide. And those are great investment opportunities. And I, as a US-based investor, don't even know the first place to start in terms of investing in African countries or in South American countries. And so by creating a global investment opportunity, those nations that are underserved by capital will now have access, or we're trying to build a situation in which they can have access to the US-based investors or anywhere else around the world that want to invest in those local nations that just don't have the access currently. So it goes both ways. We want Africans to be able to invest in the US, but we also want the US to be able to invest in Africa, because I think both are crucial to the development of our world.
And I think that's a great way to amplify this and grow the liquidity market as well, because we need to be able to provide a single platform that will be extremely liquid for us to be able to provide this investment opportunity. So essentially, with Tani, I think about it this way, and that's the one thing that Axalio is working towards providing. That has been the investment thesis all along, and for the last four years that I've been in the crypto space. So it is to provide you with an easier way to get access to investment opportunities that present themselves from around the world. So if, for example, by working with Kyle, and Kyle can present to me an investment opportunity that everybody else around the world, including in Africa, can get access to, that is a great opportunity. That is a great way to democratizing this particular investment opportunity, right? But fundamentally, I think the one important thing is this: education is key. We need to continue to educating the masses, because trust me, even in the US, there's a lot of people who are uneducated with regard to finances or investment, right? So there's a larger population of people out there who just don't know how to manage their finances or even how to tap into the investment world. So providing an education system to helping people to say, you know what, okay, this is what the investment world works. This is how it works. And you need to be educated about understanding money and understanding investment, and allowing you to knowing either how to raise funding as a small business in Africa, or as a local business in Soweto, how to raise business from your community or around other communities and so forth. And most importantly, how you can actually grow from there. I think that's definitely key, and we're working towards that. Thank you very much indeed, Wutani, for that great question. I want to move on into one of my last topic right now. Kyle, what are the risks associated with DeFi?
So I think that this is a great question, and one that's very relevant right now, because we're seeing the excitement and hype levels reaching sky high. And so it's important to be sure that we're always checking our own biases and making sure we're not overlooking things. I think that one of the major risks of DeFi right now is that a lot of these decentralized lending protocols are allowing users to lock in ICO utility tokens in exchange for dollars, and in the form of a stable coin. And so I think that there's definitely a potential that there's a flaw in the value calculation in terms of saying, okay, yeah, $100 of insert a cryptocurrency here. I'm not sure that we can reasonably say that cryptocurrency is worth $100 at this time. You know what I mean? So I think that right now we're okay, but the potential for people to continue locking in their crypto for dollars in cash will continue to have these crypto prices increasing to levels that are probably unsustainable. And then when they're at their peak, people are still able to get the lending of US dollars for their equivalent in crypto, which I think then we will see this an inevitable crash, in which case I'm not sure if the protocol is built to sustain that. I'm not here to talk bad about DeFi. I certainly haven't had the chance to audit a lot of the logic and the economic logic behind a lot of these protocols. But like what we've seen in the crypto space, there may be a few examples that it works, but we're going to see a lot of imitation. We're going to see a lot of people trying to copy the same models and trying to capitalize off this excitement. And as we said earlier, John, I'm not sure that their smart contracts have been audited properly. I'm not sure if they're properly giving the incentive mechanisms and protections for their investors. And so I think that there's definitely a risk that there's defaults on the lending. And in that case, I'm not sure how the protocols will sustain themselves. So I think that the risk of default is certainly one of the biggest ones in the DeFi space right now.
I think you're quite right. So think about it this way. So let's say I've got one Bitcoin, right? So that's my digital asset, and I don't want to sell my Bitcoin for me to get access to $10,000, right? I don't want to sell it right now. So what do? I come to you and I say, hey, Kyle, I want to borrow $10,000, right? So what do? In exchange, I give you my one Bitcoin. And you tell me, okay, well, I'm going to give you about $9,000 and I'm going to hold on to that Bitcoin.
Mm-hmm.
Now, you hold on to the Bitcoin and you give me $9,000. So I don't sell it to you. And the whole idea is I'm lending it to you and you holding on to that particular asset, and a smart contract is going to execute certain set of rules with regard to the agreement we both have as part of the whole borrowing and lending, right? Now, here's the thing. The other thing is the beauty about this is I can determine the period, unlike the traditional banks that actually force a period upon which you have to repay that particular loan. I can determine the period. I can tell you, hey, listen, Kyle, I'm going to be able to pay you back in 5 years or 2 years or 3 years, but as long as I pay it back, right? And if I don't pay it back within that particular agreeable term, then guess what? I forfeit my rights to the actual Bitcoin, and you definitely own it. But invariably so as well, like you mentioned earlier on, is depending on the value of Bitcoin, if it drops, okay, so there are other mechanisms around it that will say, you know what, okay, fine, we'll reach this level and I own the Bitcoin or whatever. So that's the other aspect of that landing, the protocol of the smart contract and how it reacts. And the reason why people don't want to sell the Bitcoin is, what if on the other flip of the coin, the Bitcoin were to reach $20,000, right? So the idea is I would have paid you back your $10,000 in cash, all right? And I can gain my one Bitcoin back for me to be able to profit the 20,000 if I want to liquidate the asset.
Yeah.
And it's kind of an interesting model right there, and definitely something to watch out for those who are interested in DeFi.
It's an interesting model as long as the prices go up. I think that when prices go down, is when we start to see the potential risks, right? If Bitcoin goes down to 5,000, now I lent you 10,000, and now I only have 5,000. So that the deal doesn't quite work the same way in that example. So that's where the risk, I think, lies.
So absolutely. So look, let's close this conversation by talking about the future of finance and so forth. And I want to do that by picking up a question from Tutu as well, who said, what's the future of traditional banking versus the forthcoming cryptocurrency inclined digital bank? So by the way, Tutu, I don't think there's a cryptocurrency digital bank, but I think there's the notion of these neo banks or digital bank that are leveraging the power of cryptocurrencies to be able to build this bank. In fact, that's exactly what we are doing with Axalio. Okay, so we are not a traditional bank. We are a sort of neo bank, or the new wave of bank, or the digital bank, focusing more on the blockchain technology and digital assets. So what's the future of that, Kyle? What do you see in the future, and how can we tell the people to be so excited about this, and start, doing not only doing research, but really joining this wave now? What can we tell?
Yeah, as someone that studies the traditional financial sector a lot, I
Right.
think that the best way to predict the future is to look at the past and see how the past evolved. And what we saw from the traditional banking sector is that they upgraded from paper to digital tracking because it was much easier, much more effective, and they couldn't pass it up. In the 80s, there were 1 million jobs of desk traders that were calling and responsible for brokering deals. That's not a thing anymore. And the banks had to catch up to that because out of necessity. I think what we've seen in the last 5 or 10 years is the development of quantitative algorithms that conduct a lot of the trading, right? So you see that investment firms these days, all of their trading happens through quant algorithms that determine the proper prices for these trading. And it's only easier, more cost effective, and more successful to do that by leveraging blockchain technology, because now there's a whole new data set that these quantitative algorithms can trade on based off of the blockchain transactions. They can analyze and make much more conclusions on these particular assets based off of that. So when I look at the future of traditional finance, I see no situation in which they do not adopt blockchain technology. I think that it's certainly something that, as I've mentioned a few times here on the show, I don't see the traditional financial institutions leaving the space. I don't see, startups putting them out of business. It's just too big of an industry that requires too much regulation and capital that a lot of startups don't quite have. And so there's a great role for the traditional banks in this industry, but they just have to adopt a lot of the blockchain technology. They already are, as we've seen and as we're mentioning. I think in the next 5 to 10 years, it's going to be something that's everywhere and commonplace. And so that's where I see the future of it. And the best place that we can play is by providing a lot of those same tools, providing a lot of those use cases, because what we've seen from banks through the history of time is that they much prefer to acquire businesses instead of building it themselves. So if you can create solutions that banks need and want, they will absolutely just acquire you and give you a nice payday to make that happen instead of building it themselves.
In fact, that's one of our strategies actually in 4 or 5 years from now. I think I'm eyeing at in 2024 or 2025 to either be absorbed by one of the largest banks that will certainly embrace what we are doing, but most importantly, a bank that is more innovative and technology agnostic, to want to be willing to work with us and so forth, as opposed to to really fight that beast. Right? We just want to be able to expand from where they stop. All right, and like that.
Absolutely, no, that's definitely the goal, and I think that's definitely a reasonable thing to shoot for. I think that a lot of these banks are going to be looking to acquire not only the technology components, but also the users that you may have and the things that you can build in terms of the traffic and the people that are paying for your services. And so it's definitely where I think that the future of finance is heading. But it may look very different than what we can see now. Only time will tell.
What do you make of Trump and printing trillions of dollars for and do you what do you make of the US dollars in the next 5-10 years from now?
Well, I will say that Trump and the Federal Reserve are actually two very different pieces. The Federal Reserve is inauditable, and that means that they actually cannot be audited by anybody. They are a totally separate organization and institution from the executive branch of the government. So Trump and the Fed actually have no communication. They don't work together. Maybe they should, but the Fed is its own autonomous organization. And so if we want to focus on that, I'm certainly happy to talk about it. I think that the reality is that the demand for the US dollar is so high around the world right now that it actually would harm them more to not print, unfortunately. I think that I certainly see the the argument for why printing dollars is harmful to an economy, and we've seen that around the world and throughout history. But I think in the global scheme of things right now, every jurisdiction is printing dollars at an unprecedented rate, whether they want to admit it or not. And so, unfortunately, that's just the debt economy that we live in right now. And so it's been sustainable thus far. And I think until there's a better solution, that's the only opportunity that we have right now, because of just the inordinate expenses that any country has right now. I mean, whatever you want to go with politics, we all want to spend our money in different ways, and there's not enough of it to go around. So instead of having some people, not get their way, I guess the solution for the Fed has been, let's just print money instead. I think the way that they've maybe given it out could be improved, but it's such a large undertaking with billions and billions of dollars being given out that it is a very difficult process to manage, and one that certainly would be more effective if they leverage blockchain technology. That's for sure.
Well, Kyle, thank you very much indeed. It's been a pleasure to have you on this show, and you've certainly loaded the audience of so many things. This has been very, very informative. Okay, so a lot of people are listening. A lot of people are trying to learn about this space, and we are here to continue educating the masses about the beauty of this particular ecosystem. So we're working together, and what I love about the crypto space is that for the first time, it is community based, and I always tell the people, as long as we speak one language, which is the blockchain language, that's to me the most admirable language around the world in this particular ecosystem. It doesn't follow politics, it doesn't follow COVID, it doesn't follow the pandemic, it doesn't follow any of that. It's about working together for a common goal. I mean, you're working towards building a global financial system, one that I can certainly tap into to be able to provide opportunities to the communities in Africa and those that couldn't even dream or fathom of being able to get access to, right? So the idea is, okay, there are some great opportunities in the US right there. We are democratizing that. We are packaging that in a way that you in a certain rural area can without necessarily understanding the fundamentals of how that is built, can securely invest in that particular asset and potentially create wealth for you if you are then educated correctly to make those moves. And that's the reason why we're here, my friend. Thank you very much, and I look forward to engaging with you and perhaps even talking on your podcast pretty soon as well. So yeah, thanks for being on the show.
Thanks so much for having me. If any of your listeners are interested in reaching out to me or have any additional questions, certainly go on the website, research more, stomarket.com. But I'm super responsive on Twitter. That's probably the best way you can hit me up. So at Kyle Sonlin on Twitter, you can find me, and then we'll have a chat.
Sounds good, Cal. Thank you very much indeed, and I look forward to talking to you soon. Okay, keep well. Gentlemen, so thank you very much. This has been a great session, and I thank you all for being on the show. As you know, I am quite involved in the blockchain space for quite a while. It's been about 4 or 5 years now that we have been heavily invested in this particular field. I've lost a lot of money. I've invested in quite a few things that actually were scams. We've learned along the way, and we've developed quite a few innovative ways for us to be able to engage into this space. We have an investment advisory firm. That's my CryptoVex Capital company. We also acquired an interesting banking license early on this first quarter that allows us to be able to on-ramp a digital asset in fiat and digital assets as well, as providing custody for some of these digital assets. So this particular thing is going to be talked about pretty soon on future shows, where I kind of present to you what CryptoVex Capital custody is all about, but most importantly, the excitement we have on building Axalio. So when it comes to Axalio, we have put together a great team. Very soon, we are going to present to you who that team is. Roxanne is certainly part of that team, and we want all of you guys to join the journey, right? So inquire, engage, and my marketing team and PR team, Tabang, is actually following this call. He will be able to start providing and engaging with all of you in educating you guys what we are doing with Axalio and why. This is an exciting. We've taken a bold move for us to be able to challenge the guys like Discovery Bank. Yes, I would certainly want to have a conversation with those guys. This is the entrepreneurial spirit in me challenging all of these traditional things. Time Bank as well. Yes, we know exactly what kind of product and services they offer, but none of them actually do offer on-ramping services into crypto. Also, Bank Zero, who is just a mutual bank that will focus on savings. We are going to challenge them all, and we provide a matrix that provides so many interesting services in that space. For all of you guys who are interested in crypto, Bitcoin, and other digital assets, this is the place, this is the show. Ask me questions, prepare your questions, engage with me, and I look forward to having you. So next week, Monday, we're bringing in another exciting guest. I will let you know sometime during the week who that guest is going to be, and we are going to be talking about some amazing things. Until then, I love you all, and yeah, stay tuned for more. Okay, so meanwhile, keep engaging, keep connecting. We love to have you on the show all the time.
So, can blockchain be a catalyst for development in Africa? Here is our interview with John Lombela.
It's going to be a pretty unique show where we're talking to digital entrepreneurs and black entrepreneurs that are actually doing great things. Let it be in the marketing space, let it be in cryptocurrency. And I brought back John Lombela, a good friend of mine who's been playing in that space for quite a while. John Lombela, you know, John is the cryptocurrency guru. I call him like that.
I'm an entrepreneur myself, all the way from South Africa. It is important to always develop new things, right? So ambitiously build new cases beyond just financial services. Yes, we believe in the financial services. I mean, Bitcoin, as a matter of fact, was created as a payment system, a peer-to-peer cash electronic system. It all started from there, but it doesn't have to stop there.